Hello everybody, Sarah Strauss here with The Place to Mortgage, and I'm coming at you today to educate and talk to you a little bit about what we refer to as reverse mortgages, or you may have heard them referred to as chip home mortgages. Essentially what this is a mortgage for the aging population. And we have been doing a few chip mortgages or reverse mortgages lately, which have really brought a renewed sense of joy into our office to be able to help somebody that, otherwise isn't able to, obtain financing and, really help them be able to live their life. There's a few different reasons why the elderly population might be looking for financing in their home. At that point in time, a lot of people have paid off their mortgage. And don't get me wrong, that is the lifelong Canadian dream. We all want to have no mortgage. But at the end of the day, we really have to stop to think about quality of life and what that means. And for some clients that we've been talking to in our office here lately, it's not necessarily living with a mortgage that's paid off to then die and leave an inheritance to their family, but yet be able to access that money in their home and live life while they're still living. So for a couple people here, we've been able to set up some situations where, they were able to pull a lump sum of money out of their home and, deal with some health issues and, not have that strain, the financial strain of dealing, just bettering their life health-wise. For another gentleman that we did reverse mortgage for, he was able to give the down payment to his children then to be able to buy their first home. So in a sense, he was proud of the fact that he was able to give away an early inheritance with our assistance. There's lots of different reasons why seniors might be seeking out a reverse mortgage, and that's just a few of them. We've got, people in the past who we've been able to set it up so that that mortgage pays them monthly. So instead of needing a lump sum amount, they're able to collect, say, $1,500, $2,000 a month that mortgage is paying them. So in essence, a reverse home mortgage is a mortgage where we put the mortgage in place by either giving the client a lump sum or setting it up where they receive lump sum payments to them along the way. Essentially, it's a mortgage where they don't make any monthly payments. It is limited to, you have to be 55 years or older to be able to obtain a mortgage, a reverse mortgage. And the amount that you can obtain is dependent on your age. So for example, if you're older, we can likely get you more of a mortgage. If you're 55, your lifespan's likely statistically going to be longer. So that's where we might not be able to get you quite as much. We have all these fancy calculators that help us determine how much money we can get for you. But for example, I just stuck some numbers in my computer here, and I'm going to give you a couple of one example that I stuck in. So I theoretically said that we've got a 70-year-old male, and he lives in Innisfil here, which is where our head office is, and his house is worth $400,000. When I stick that into my calculator here, it's coming up that I can give him a chip mortgage for approximately $148,500. So let's say theoretically this senior wants to give an early inheritance to his family, or wants to travel, or nobody's traveling right now, or wants to get a more reliable vehicle or pay for hearing aids or whatever that may be. We do find there are seniors that are struggling right now with cash flow, and there's no point in sitting on that equity in the home and struggling day to day in your life. It's, life is worth living. And so for example, we can obtain this gentleman $148,500, which he then makes no payments on at all. Or we could set it up where it's not giving him the $148,000 up front, or maybe he wants a certain lump sum up front and then he wants monthly payments deposited into his bank account. We can structure that customizable for any client. There are a few myths, and I've heard it in the past, You know, there's always a worry about getting a reverse mortgage, and I wanted to address some of them in this video. Lots of people worry that they're giving up the ownership of their home, and that is not the case. A reverse mortgage or a home equity, CHIP home equity product is simply just registered on the title of your home, just as any other bank would register a mortgage on your home. You still are the owner of that home, and there's just a mortgage that's registered on that home. The other, myth or concern is that the lending values are quite conservative. And I'm not going to lie, of course they are. We typically, that $400,000 example, we can only get them about $148,000, but that's because we have to ensure that we don't put clients in a situation where we're exceeding the equity of their home at their time of death. We want to make sure that we're never draining the home of all of the equity. So yes, sometimes it might be a little bit conservative, but that's always in the protection of the clients themselves. Homes typically appreciate in value is another myth. And I mean, certainly in Central Alberta here, we've seen where homes aren't appreciating and they are depreciating. And that can be a concern for some people. But what it's important to know is that CHIP Home Mortgage does have a negative equity guarantee. So you'll never be placed in a situation where you now owe more money than what it's worth at the end of the day with that guarantee they have in place. I'll be doing a couple posts following up with these myths and reiterating that just so you can see the value of a reverse mortgage. Going back to the equity piece, for example, I put it in a very conservative. There are some markets across Canada that are appreciating more than others. But if I put a very conservative appreciation value of 1%, and this same client, let's say we gave him $148,500, and he keeps that mortgage for 10 years, and let's say that, let's keep the appreciation at 0. Let's say that nothing appreciates in the market. In 10 years from now, his home would still be worth $400,000. Let's hope it's worth a little bit more. His reverse mortgage we originally put in place for him would be $148,500. The interest that would have accrued throughout that 10 years would be $89,898. So when he goes to sell that home 10 years from now, he's still going to have, where are we here, $161,000 in equity from that sale. So as you can see, it's not draining the home equity. And I think that's the biggest concern, or, a lot of times the hesitation we get from clients is they're worried they don't want to be in a position where they're losing ownership of their home or they're losing all of their equity. But what I really want to talk about is just being able to provide these seniors that have been coming in recently with the lifestyle that they want to live in their last 10, 20 years of their lives. And there's nothing that's been more satisfying as a mortgage broker than, following up with these clients and learning what they're doing, or hearing about their travel stories, or, seeing how they've got different, eye surgeries and, teeth fixed and things like that they otherwise wouldn't have been able to accomplish without us. So again, if you have any questions, or you've got family that might, need a little bit of assistance or education, or just want to chat about what a reverse mortgage looks like for you or one of your loved ones, we would be happy to help. Feel free to reach out anytime. Have a great day.